All right, guys. Yeah, this is another backtest video. You know what we do every week? We do a backtest on the previous week and what happened the previous week on some pairs. That way we get to learn the market structure. We get to keep in mind what market does, either via market structures or via market conditions, the reason why market move, why price move, what makes them move, and all these things. So we get to keep in mind of all these things. And this is a rare case. Usually there are some rules that I don't talk about, but this one, I would talk about this one here because this is a rare case. It happens, but not often time. I think it happens more on currency pairs, but not always does it happen in indices, synthetic indices, right? So, but this happened. Now let's look at the chart. Now this is VIX 10 1S index, the volatility pair. So this was last week. This where you see this blue line was last week. So last week market was still bullish. If you notice, it has broken a structure here. So it was still bullish as at last week Monday. Market was still bullish. We had this high. We had our trading range here, daily trading range between here and here. I think I should take this one off, so I'll put the one that has the mark. Yep. Yeah, I'll put the one that has this mark here. Yes. So the chart was between this point and this point. So we're waiting for like a retracement down to this point. So, but see what happened here that I can see. If you notice markets, this is why I always draw my areas of interest also in daily time frame while going down, so that I know that within that daily time frame, that's where market is, getting to find entry from, right? So there is if you notice, there's a fair value gap here. Yeah, the reason why I had to expand it out so that I could see it clearly. There's a fair value gap here, which most times I don't really draw this fair value gap because then there is this other block here. So it kind of covers the fair value gap. So I wouldn't really draw it as a fair value gap. I would rather draw it as an other block, as this other block that covers that area, right? So instead of drawing the fair value gap inside the other block, it's just another block area. All right. So overall, we have this high. Overall, if you notice, we have this high where market is actually running to at the moment. Yeah, we have this high here. Let me change it to dotted lines. And this high, if you notice, I think this high is also corresponding with this one. But yeah, but that's the high that we have overall. All right, so market broke structure, and now market respected this fair value gap on daily time frame here. This was the fair value gap here. Here. So we saw it's kind of, why is this thing like this? Okay. Why it's in the shift? Okay, so I'll leave that for that. So this was the fair value gap, right? So we had another fair value gap here, but it's actually in an order block range. So I wouldn't draw that. But then if I wasn't seeing this market, I'll draw this out and I'll draw this out. So there's something rare here that I was talking about. The rare thing I was talking about is where you have your break of structure. This where you have your break of structure. This where you have your break of structure, then at that same area where you have your break of structure, you have your area of interest there. So this level is kind of called your equilibrium level. So if you're trading, if you use Fibonacci retracement for your this thing for your chart, you notice that they call this area after the break of structure, the half of it, they call the top side. Let me do this so just for educational purposes. They call this, go back. Supposed to be this way. So they call this area, yeah, they call this top area. See, I divided it into 50% of each, right? So they call this top area, the other half, the top area of the 50%, they call it the premium zone, and here they call it the discount zone. So a lot of people who trade, and I also trade discount zone as well, because discount zone is where I come in to look for areas of interest. Like for example, this other block that is here now, I come to discount zone to mark it out, hoping that price will come down to that point to take off and start going back, right? But now at this point, one of the reasons that made this market to move here, if you backtest this thing, you will see it a lot. One of the reasons that made this market to move out from this point is, one, there's an area of interest here along with the area where you have your break of structure. That is within your discount zone, within your equilibrium zone. So this area, this middle point is called the equilibrium zone. I think I would, yeah, it's called the equilibrium zone. See? So when you have something like this, now happen where you have your area of interest, order block, fair value gap, in at the middle, at where you still have your break of structure point, there's a likelihood that market may come back and retest on that area before taking back up. So this can also happen in currencies. So just so you know, I think it happens even more in currencies. So where market doesn't really get down to this point, it just gets to this point. So this is the only confluence you need to take this market for a sell, right? I think this is making noise. Yeah. The only confluence you need to take this market for is for a buy is that these two aligns. If there was no what do you call it? If there was no fair value gap here, then we know that we would have to wait for market to come into the discount zone for us to buy. But at this point, these two aligns, it kind of makes it a sure resistance point. If you look far, you see what happened here. It's actually a sure resistance point to this middle. Let me put a line there so you see what I'm talking about. This middle here. You see how market came here, how market broke from there, tapped it on this candle, then the next candle broke from there. You see how market also came to this point, broke and retested, like turns it to a resistance point and left. It was still on the same middle. You get? So this place was actually, this is like the three confirmations that we've seen on this particular pair now to take this market for a buy. If we were to take the market, these were the three things that, by seeing these three things alone, you know that this buy is sure, right? This buy is sure to happen. So the first one is that was the area of your break of structure. Second one is where you have your area of interest around that area of break of structure, around your discount level area. That was the second one. Yeah, and then the third one is that there is a zone there. The same place, there's a zone there. I don't know if you can get what I'm saying. So if you break it down to a 4 hours time frame, the time frame which you would enter, I don't know if you remember me saying something about um the zones, the rules for entry. The rules we have for entry on this pair on our trades. One of the rules that we have, let me post it here. I want to post it here. Yeah. So one of the rules that we have for our trading pairs is that there must be 2 to 3 rejections confirmation on the order block or fair value gap zone. I think it's high time I correct this thing. Or fair value gap zone. Yeah. Yeah. So there must be 2 to 3 rejections on the order block of fair value gap zone. If it doesn't trend there, if market doesn't trend to that place, then if after your first break of structure, which is here, then and it goes straight to your other block of fair value gap, it went straight, there was no trend going back, going down there, then trade on the first reversal candlestick pattern you see, right? So this is the same figure as your number one, the A of the two, right? This is the same figure. We need to have 2 to 3 rejection. The rejections could be candlestick rejection. It could also be a structural rejection. When I mean, it could be candlestick, one candle rejecting with weeks, with a week, another one with another week, like that. And it could also be a structural. When I mean structural rejection, it could be candlestick pattern, the pattern rejection. Do you get? So, but you have to be sure before you say reversal candlestick pattern, you have to be sure it's a full candlestick pattern. I'll give you an instance, right? Yeah, I'll give you an instance now. When I mean full candlestick pattern, I'm talking about maybe this is 4 hours. Okay, let's just continue. But if you know your candlestick, I think you should go look up your candlestick Bible. Yeah, Japanese candlestick Bible. Go look it up to understand what I mean by candlestick reversal patterns, right? A full candlestick reversal pattern. So the first time market came here at this point, if you notice as well, at this point we have like let me delete this. We already saw this too, right? So I don't want it to confuse where we have market placement. So yeah, so if you notice at within this same what do you call it, within the same range of your daily fair value gap, we have another fair value gap just about here. Yeah, just about here. This is another fair value gap. You see, but this is for a 4 hours time frame. Yeah, this for a 4 hours time frame. So when you look at something like this, let me scrutinize this thing. All right, so when you look at something like this now, market went straight down to that place without trending. Now we're looking for the rejections, 1 to 3 or 2 to 3 rejections, right? The first time market came, these were structural rejections. First time market came, it broke above the daily fair value gap area. Second time market came there with this structure, because this is a structure, this is like a star. This is the first time it's coming there. It broke above. Second time, it came there with an engulfing. It broke above, right? Then this third time, it came back there. So if you see, it looks like an uptrend. It looks like it's trending upwards. First time it came, second time it came, third time it came. So this third time when it came now, around this point, around 9 on Saturday yesterday. Yeah. So the third time when it came there, it did this move. It did this move and made a star, a morning star pattern. So your entry would have been at this point. Your entry would have been at this point here. And your stop would have been below the structure of the morning star, below the structure, right? So this is how far market has gone so far. It has actually given me, I do trade 1:3 or 1:4, but most of the time 1:2. So 1:2, 1:3 is okay for me. But at this point, market has actually given you your 1:3. This was where the 1:3 activated here at this point. Yeah. This was where it activated. It actually activated today, being Sunday, because I'm actually making this video today. So I didn't follow this trade because I didn't see the trade. I was actually busy. If you check, if you followed me up, I was actually busy holding a trade on VIX 25 index, the volatility 25 index, which I made some good profits in it. And what I do is I analyze pairs. And once I see one that is sure to happen for that week, I take that one and I leave every other one. I don't over trade. I just take that particular one and I leave every other one. So as long as one aligns with my rules, I take that particular one and every other one is out of the box. That's just exactly what I do. Do you get? So, but yeah, this is what we have as backtest for this week that is just about to finish, right? Going into next week, we'll use these informations that we are gathering about the chart to look into next week, to analyze next week charts, okay? So it's always good that we do these things and make it make sense to us. So if you're following me, if you're new in this chat, please go back and watch a lot of other videos. Besides, you will not understand a lot of all these things here, except you go back and watch it. And this is not, these videos I'm posting here would not take you from beginner to advanced level. No, you have to go learn beginners to advanced level. Very soon I will start posting. I haven't yet started posting educational stuffs on my YouTube, or rather on my, what do you call it? On my Instagram, right? Because that's where I intend to do education, more educational stuff. So I haven't started posting it for some technical issues. I'm still setting up that kind of that environment to do that, right? Or that portfolio to do that. So I'll start very soon, but for now, we're doing analysis and we're doing back tests, and we're also doing trade updates. Whatever trade we're taking the updates. So as for this pair is going to run up all the way to this point. This is a sure 1:4, right? So you could follow up to see that it gets there before it reverses. Besides, this place is a sensitive area for it. Yeah, this place is a sensitive area. So this chart was actually supposed to be a good trade. If we had seen it, it was supposed to be a good trade today. Yesterday rather, it was yesterday the trade, right? Around 1 p.m. in the afternoon yesterday. So, but it's a good trade. So I'll leave it to you guys. But subscribe, drop a like, and drop your comment if you have something to tell me. If you have a different bias as well, I would actually appreciate it to see your own bias on this pair and what you think about the market as well. But this is my own view. This is how I look at the market in this way, right? If you don't understand more, you want to ask more questions, you can always DM me on my Instagram at Josh_FX Pro, or TikTok. I'm on TikTok as well. I post the same things on TikTok, and this is my YouTube channel. All right. So for now, um, do well to drop your boy a like, a comment, subscribe, and turn on your bell notification so it will tell you whenever I post a new video. So right now, Josh FX signing out.